Welcome everyone to the Kindle Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Don't forget to subscribe, like, and share these videos. Just want to make an announcement for all of you using the WaveTech research tool. I'm going to be doing a Saturday morning training session. I will be sending a Zoom meeting out. It will be limited to 100 people right now. We're in the process of getting some other software to do the presentations. I will record it and post it on the YouTube channel. I would strongly suggest for you to try to come to that meeting if you can. If there's no distractions on a Saturday morning, I'll be able to really focus with you folks and not have other agendas going on that day. There's also going to be another meeting at 4:30 on Tuesday, which will be a much lengthier meeting, which will be simulcast on YouTube, and we'll have a Zoom meeting again so that you can ask questions. I look forward to working with you folks. There's so much to learn about this tool, but you have to know where to look and how to find these trades. And I'm going to walk you through an analysis techniques and a lot of other things. Thank you again for being customers of ours. As we end this week, we're going to end it on a quadruple witching day. Oftentimes, these are very volatile days. I believe that Thursday's action was potentially a fair amount of the unwind that started in the evening session before Thursday morning. There was an excessive amount of volume in that evening session coming into the opening, and today was just a grinding of back and forth, not a lot of volatility. When we come into the final hour of trading today, there might be some big unwinds. It's impossible to tell what's out there. With all the craziness and volatility that we've seen over the last 3 months, there could be some positions laying out there to cause some additional volatility. It's actually very unpredictable from that standpoint. Yesterday, the release of unemployment claims came in at 1.5 million. It continues to be very high overall, which tells us that the economy is not coming back quite as fast as everyone thought. Even though market participants saw this, we did have the grinding, and as I said a minute ago, I believe it had a lot to do with the unwinding of these positions, primarily in the futures and the options market. There are no news releases today, so we're going to be operating on pure sentiment, which is neutral at best. Over the last couple sessions, I've been talking about a potential reversal and downward movement. What we're seeing instead is a sideways pattern. There are some elements that are starting to unfold that tell us we could see some more downside, but everything is in a pivotable area right now. I'll go through all this in detail here in a few minutes in the technical section. I mentioned in yesterday's video, we'll continue to watch for any type of activity or announcements from the Fed, but it appears that they will most likely move to the background unless there's some significant event that happens. They did reveal the types of ETFs that they bought and how much today. I question whether or not they bought anything. They did buy a fair amount of ETFs in the corporate area, but I still don't understand why they're doing this other than that's some posturing. They bought a few $billions on a balance sheet as big as the Fed. It's a non-event, to say the least. I continue to suggest that this is all posturing and window dressing from the Fed to keep market sentiment at a certain place. So far it's working. They're keeping the markets very stable. With today being a Friday, this is the day where our database cranks out all the intermediate buy and sell signals. So it's going to be interesting to see what happens, and I'll cover that on Sunday night. Let's go ahead and take a look at the charts and see what they're telling us for Friday's action. Starting with the cash S&P, there's an interesting thing going on. You're going to see the market grid is contracting. Underneath, we've got a slope up, and we've got basically a wedge. The volatility is contracting, putting us in a very narrow range, and typically when that happens, it will just explode out of this range. Drawing a line through ppm1, you'll see momentum is just flattened out completely. We're a little bit below some of the first and second derivatives. Overall, the underlying trend as ppm2 here is at a plus 0.30, which is continuing to drive this slight uptrend. It looked like 2 days ago we were going to try to fill that gap, and we failed to fill it, and then we started down, but the downside has just been so limited. Most of the action that we've seen has been overnight in the futures. It's not really happened in the cash market. Yesterday's range was one of the more narrow range. We traded 30.93 to 31.20. We've stalled out at that 31.20, 31.40, and we printed the 51 level last week. This entire area is starting to become a congestion area, and there's not any trends here to talk about on a short-term level. As I've been discussing for a while, on May 4th, we got a buy signal on the models. We're continuing to see that play out, and that as the models remain long in this pattern. Now, went long at 28.44, it's 31.15 right now. The trigger point for this trade is now 30.86 today, roughly. A close under 30.86 would trigger an exit and put us into a neutral mode. But this type of configuration is where markets get really hard to call from a standpoint of what's going to happen on a day-to-day basis. It appears that the contraction in volatility is setting up some sort of move, and there's no way to figure out which direction at the moment, except for the sideways action. These PPMs are telling us we're not getting any downward acceleration. As we look at the configuration on the weekly chart, just seeing how the grid played out this week on the cash markets, we had a low of 29.65. S2 was 29.53, so we fell short of that. On the upside, R2 was 31.29. We traded in between R2 and R3 on a weekly basis. So basically, we saw an S2, almost an R2. We could see further upside today. A few minutes ago, as London opened, we saw a nice sharp surge on the futures, trading all the way up to 31.25, and now they faded back to 31.11. So there's a lot of unwinds going on as each one of these markets and different players are coming into market. As I mentioned in the opening comments, that 70% of these triple and quadruple witching days end up to be positive days. But when they're not, they can be a huge down day. So as I mentioned a few minutes ago, this is a pivotable pattern from a standpoint on a short-term basis. On the intermediate basis, you see PPM1 declining here, but then you see PPM2 and PPM3 trying to turn up. And there's a lot of folks talking about major downside. That's what I've been talking about, the reversal that I saw coming the other day. We did manage to close lower. We got some follow through, but it was very muted. That was going to be the expectation. I didn't see a big decline coming here, primarily because of this 10-period moving average that's under this market on a daily basis. We also have the 200-day moving average at the 3017 level. It's not relevant in the current configuration, but there is underlying support layered down all the way down to that level. The expectation I talked about the other day was maybe we would trade down to 3060. On the futures, we did hit 3060 on Wednesday night prior to Thursday's opening, but we did see that kind of action. And then when we saw the big rebound off of these levels and the markets that came in weaker yesterday, I still think we're seeing an unwind of the quadruple witching that will unfold on Friday's action. Talking about what's likely to occur next week, if we remain above 3100 today on a closing basis, then we're likely to see the market continue with us. We are likely to have a slight bias to the upside going up toward that gap that we were talking about at the 3183 level. That's still out there as a potential. As I mentioned a few minutes ago, our short-term model is still long. It's not going to get kicked out unless we close below the 3086 level. If that happens, I will discuss that on Sunday evening. Tonight I'm going to cover the NASDAQ futures. This trend has obviously been much stronger than any of the other trends. I talked about this on the live cast the other day, that this is the new economy versus the old economy. The S&P has a lot of these major tech stocks in the weighting on the top end of the index, and Dow Jones also has it, but we're really looking, when we go to the composite of the S&P primarily, there's a lot of old school companies on there, and that's why we're seeing a lag between the NASDAQ and the S&P. We understand the basics behind this. Now this pattern here, we're still, just like on the S&P though, we're seeing this completely, just like in the S&P, the momentum, I'm drawing a line through the PPM1, PPM2, all of this momentum is just absolutely flat, but maintaining trend level. Now you see PPM1 is at 0.27, PPM2 0.29 positive. Anything over 0.25 is a trend, and PPM3 is 0.39. If you're new to the channel, the PPM stands for price pressure momentum, where I measure the angle of the attack of the trend, and it gives us probabilities what's likely to happen. As we look at the upward slope in these averages, as I just mentioned with the PPMs, the red line, which is the 10-day moving average, relates to PPM1. The cyan line relates to PPM2, which is at 0.29, and then the green line is the PPM3. And each one of those are telling us that we are in trend mode across the board. As far as a big rollover happening here, it's not likely, but what we could see is a pattern that sets up with some sort of ABC would go into this sideways range. Mainly because we are seeing a little bit of a fade in both PPM1. You see it is down ticking here. PPM2 is below its first and second derivative, and the longer average is still upticking, which is down here at 0.39. This is telling us that the underlying trend is good, but that support level is way down at 9,300. We're trading at 10,057. None of these numbers matter at the moment, but the PPM1 at 0.27 said there's only a 40% probability for the market to trade below this 98.89 right now. So there's substantial support in this market. In my view, looking at the weekly patterns, that we're unfolding in waves of threes. We're not seeing any 5-wave sequences here. It's hard to come up with anything, but we're going to extend, and this is going to be a regular B wave high. We can go much higher than where we are right now, still be a B wave. B waves can make a new high, and it just changes the configuration. But what we're seeing here, even on a weekly basis, you can see that PPM1 is a plus 2.02, a plus 0.51 on PPM2, and a plus 0.62. So all of these things are telling us that the underlying bid is going to remain, that this trend is positive, and we're not going to see any major declines. Now we can see some backfilling in the pattern. We're looking at a weekly graph here. There's plenty of things that can happen in the equity markets that will represent a minor decline, but it does not appear at the moment there's any major declines likely to happen from this particular position. This will complete the commentary for tonight. Don't forget the WaveTech meeting on Saturday morning and then again on Tuesday, so mark your schedules. Thanks again for watching. Have a great weekend, everyone. Look forward to talking to you on Sunday night.